Hi there, Sam Lee here, President and CEO of NorthIsle Copper and Gold. We have a very large copper and gold porphyry in British Columbia, which boasts over 4.9 million ounces of indicated gold resources and approximately 2.5 billion pounds of copper in indicated resources as well. I'm also joined today by our Vice President of Exploration, Robin Tolbert.
Sam, good to see you, and Robin, lovely to meet you. You got a big project. It's a nice time to be in copper and gold at the moment. High prices across the board there. But my question to you, and I think the question we sent in is, how do companies like you take advantage of these high price, metal environments that we're in right now? I notice, and that's the drill program, which is fantastic, and hopefully Robin can fill us in on that one. But what are you doing? What are the kind of conversations happening at the moment, Sam?
Yeah, so obviously you start with a very large project, right? Which is what we have. As I mentioned, we've got an existing PEA on two projects called Hushman and Red Dog, which boasts about $1.1 billion NPV, 19% after-tax IRR, 22-year project. So this is right now, I would categorize as a medium-sized copper project, medium capital intensity copper project, with a massive gold credit, right? So this is 100,000 ounces for 22 years, which only entertains about 600 million of the billion tons that we have in resources. So clearly, to answer your question, how do you become relevant in an upward trending pricing environment? We obviously saw recent highs on not only copper and gold. It's to grow the project, right? It's to make it bigger. It's to make it obviously better. And that's what we are doing through the drill bit right now. And super excited to announce that we've initiated our 2024 program, which comes off the heels of our most successful exploration and development drill program ever in 2023.
Right. Okay. And like I say, well, I definitely want to get into the drill bit in a second, but I'm trying to face up to the economic realities of doing this, drilling to this edge of the envelope, which is Canadian through and through. We're seeing a lot of companies starting to talk about how do we get into production earlier? How do we show this route to market, this revenue opportunity? You're not doing that. You think that you got something big and you can make it more attractive by doing more drilling.
That's not true. So I think that the premise of our strategy is to address as many levers as possible. So certainly as it relates to growing a project bigger and making it more economic as it relates to a starter pit, a higher margin pit, all these things we're doing, which I can go into right now. That's one part of the lever, right? That's something that clearly is going to address how do we get material into the market as quickly as possible. On that side of it, that question rather, it all comes down to how much of the bottleneck have you been able to address today for any project, right? And for us, we are blessed to have infrastructure that was already built in the region, as you can see in this map, that was effectively built for a very similar sized project in mine, the BHP Island copper mine, back in the 70s. So, in terms of power, in terms of roads, in terms of a port, they all exist within a 20-kilometer radius of our project definition, right? So we're not talking about 400 or 500 kilometer closologies here. We're talking about 20 kilometers. This area was built because of a project that is of the size that we're contemplating right now. So that's the first thing that you have to sort of appreciate around projects that can get developed and expedited in a quick manner. The second thing is obviously the jurisdiction. Is there political will on the government front, government being the provincial, federal, and First Nations front? And is there community support for projects? And we believe that is probably one of our strongest advantages in this area because, again, this area on the northern part of Vancouver Island was built for the Island Copper Mine. Prior to this Island Copper Mine, there was probably about less than 300 people living in Port Hardy. They didn't have paved roads that went up to the site. They didn't have access to the grid power. All of this was built by not only BHP, but the governments to progress this project. So this is a brownfields area. It's certainly a district area, and that's how you expedite projects. That's how you sort of traditionally advance projects quickly. The third thing is quite new and novel as it relates to what we're seeing over the past 5 to 10 years. which is, do you have access to clean power, right? Do you have access to an abundance of fresh water? We've seen massive capital expenditure blowouts in South America in very arid regions around desalination plants, right? And so freshwater is a critical component around mining and developing projects like this. And we have an abundance of it. We have about 2.9 meters of rain a year. So yes, we will have to make sure that we're treating it faithfully. But I always say this: I'd much rather buy a couple $100 million water treatment plant versus a multi-billion-dollar desalination plant. And then in terms of the clean power, well, the north end of the island has one of the largest wind farms in British Columbia, which produces an excess capacity of over 100 megawatts of power for not only our province and our country, but also for the U.S. as well. So those are, I think, are the components of making a project quite developable and advanceable in quick order.
Right, and I noticed in the press release you were talking about preliminary project trade-offs. That always fascinates me because it means that you're starting to hone in on, again, coming back to the economics. And the reason I talk about economics so much is there's a lot of kind of advanced stage projects. We saw an announcement, the end of last week from a large gold developer. Their economics blown out of the water, 14% IRRs market, very disappointed. 14% IRRs, you can see why. For you guys, those trade-off discussions starting now, as you move towards the end of this drilling, which we keep promising to talk about in a second, it's really, really important that people understand that you're focused on the money and the economics. So if I'm looking at this from outside, I'm thinking, well, Red Dog has shown me, we've talked in the past, Sam, about the potential of the size and the scale of that operation over there. Why go down to the sort of southeast and target Pemberton now?
Oh, I see. Okay. So this is really interesting, right? Because 6 months ago, all the questions were around exploration drilling. But now, as we see commodity prices get up to these all-time highs and sustain it at around that area, we are starting to see what's the reality of these things. So this is why I think our strategy is very sound, because we're focused on both. So to answer your question, is that this project has always been, again, medium capital intensity, right? Plus $1 billion plus for capital expenditures to develop. And that's why we focused on the Northwest Expo and Red Dog area, because we believe that we can actually create a starter operation, something that could reduce the capital intensity by a significant amount, that attacks the higher margin area, and then elongates the current 22-year life of mine by a significant amount, right? And so that is the trade-off study that we're doing right now. I think it's going to come out sooner rather than later. It's something that we are finalizing right now, and certainly finalizing our decision on what we're going to do. But suffice it to say, if you are in a very positive commodity price environment, a robust commodity price environment like us, we're in right now, and we believe we're approaching the second half of the cycle, that we want to make the project as robust and big as possible. And while doing so, also identifying a lower capital intensity project. And that's why we're focusing on Red Dog and Northwest Expo as that lower capital intensity, higher return project, and then effectively putting it up front on a much larger project that could potentially contemplate over 1 billion tons, which is obviously what we have, versus just a 600 million ton project. So again, I think we're being very cognizant that capital intensity risk still remains a consideration in this environment. We believe we can solve that problem with Northwest Expo and Red Dog, which again, we released our new resources on Northwest Expo, about 70 million tons of maiden resources, approximately 1.1 million ounces of gold. That's in addition to Red Dog, which is a 50 million tons. And of course, in addition to Hushamu, which is our larger tonnage, lower grade project. So from our perspective, we do believe that the project definition is going to be immensely obvious to everybody. And as you know, you talked about lower IRRs. Well, IRRs are conditional on reducing the upfront capital that you spend. And we believe we can solve that problem with Northwest Expo and Red Dot.
Right. Okay. I think without further ado, it's time for Robin. Just maybe give us a bit of detail then, because I guess what I would like to come back to you on afterwards, Sam, is what is, I presume Robin's going to tell us what the drilling plan is, why you're doing it, what you're hoping to get from it, and I'm interested from you, Sam, afterwards. Well, how does that enable you in your decision making and the board's decision making? So should we hand over to Robin?
Yeah, maybe the best way to set that up is for Robin just to answer the question, what makes him excited about this district, right? What are the things that are driving him to come to work every day? Robin, take it away.
Question. I like that.
Good day. Well, I just got to let you know I'm really excited about this year's program, and that we have last year found the new project West Goodspeed, and we have 2 drill holes in that. Both of them are 163 meters just below surface, within 6 meters of surface, 163 meters of 0.45 copper equivalent, and all within 250 meters. So to expand on that, we'll be focusing on this West Goodspeed, which is only 3 kilometers, less than 3 kilometers from Northwest Expo, 1.5 kilometers from Red Dog. So the program that we've got, there's Red Dog, and just 1 kilometer towards us is West Goodspeed. We go to the next slide. So this is what was done in the past. So this is looking to the east, and the 2 holes that had the 163 meters of mineralization, the 2 in the front there, GS 2304 and 5, and this is associated with a mag anomaly which extends to the south, which is to the right, and we are now drilling to the south to see how far the limits of that porphyry it is, and that is a true porphyry. It goes stockwork, it's corcerosite pyrite alternate, and we're looking for the higher grade potassic alteration. And within that area of Goodspeed and Northwest Expo, we have several targets, which are like we see here. So we got this. We're looking at the main target is this one in the middle that we're drilling, and then we've got the southern extension of that with this the hole is called number 5, and then there's a further one off to the west. So we see several potential targets within this area. It seems like there's a cluster, and all the mapping prospecting that we've done has indicated that there are possibly more than just the 1 or 2 porphyry targets that we have here. Right now we've got 3. So at Goodspeed, what we have here is we're drilling right now the one that's in the top right, just to the right of GS 2304, which is to the east. And you've got this large mag anomaly, which we're testing, and the mineralization associated with biotite magnetite or chlorite magnetite, which is retrograde altered biotite magnetite. So that's why we're focusing on the mag anomaly here. And this extends to the south towards us, about 1,500 meters. So it's potential of a large target. So that is really a very exciting area. In addition to that, we have at Northwest Expo, we have, of course, the resource in there, which is in where those red drill holes, red dots are. And then we show the next one. This is showing what the pit would look like. And what we find is the mineralization dip, which is to the south, which is to the left, is very high grade, but that currently is in the inferred category. And we are planning to drill 7 holes through this red area, which is the high grade, and that will increase the grade and the tonnage of high grade and
what does high grade mean, Robin, in this case?
We're looking at close to 1 gram gold.
Right.
And so that this will also bring everything in this pit area up to 90% indicated, which is
Okay. So
So
that's
just to put that in context, you talked about economics, Matt, right?
Yeah.
That 1 gram per ton gold equivalent, that's essentially over $75 per ton NSR value rock post recoveries, right? So that's a 2 to 3x expansion from what you would see in our bigger porphyry system. That's why we're focused on this margin expansion opportunity in this higher grade zone.
right. And if I may, Robert, so just to jump in with Sam, just if you can continue your thinking on that one. You put it in the context of a $75 NSR rock. When people hear the word porphyry and they look at small companies, they get they get, I guess, quizzical about how on earth do you fund that thing. Now, clearly, there's going to be some strategic partner component required if you can prove this up as a meaningful economic porphyry system. Is that right?
Yeah, that's right. And it sort of is, I guess, a third of the way there, right? Because we have a resource now, indicated and inferred resource on this project. We have an indicated resource on Red Dog, which is right next door, 2 kilometers away, right? So if you could conceptualize that, that's nearly 100 million tons of this higher margin rock, right? So if that to us is the starter pit concept, call it the first 15 years of the project, and if you add that to another 22 years, 25 years, which is what we've already defined, that's a big project. And that's one of the trade-off studies that we are considering right now, is to amalgamate all projects together, Hushamu, Red Dog, Northwest Expo, with this Northwest Expo and Red Dog, the higher margin projects, driving the first 10, 15 years of the economics and reducing the capital intensity significantly, right? So if you think about kind of comparisons from a throughput perspective, 20,000 tons per day would be kind of what would be a starter pit in most people's minds. That's what Artemis Blackwater is starting with, and they've costed their initial capex and actually have hit that number at about 700 million Canadian, so 500 US. That is considerably smaller than what we're seeing around these lower IRR projects that you've referenced before, of these 15% IRR projects that are billions to $2 billion capex plus, right? So I think the big change in approach here from perhaps the last cycle, where everyone was looking for big at all cost, versus this cycle, everyone's looking for big, but sort of a pathway on how to get to big. This is really helping us. Northwest Expo is really helping us establish that bridge to the much, much bigger project. This is why we're spending so much time on it.
Fantastic. And Robert, so back to you. Can you say you're planning 10,000 meters or so? Is that right?
10,000 meters. That's correct. So
perfect. Now, how are you coming at that? But because it's you got to go for the good targets first, presumably, and also you got to help with the teams to deliver those nice headlines that the market likes to see. So can you tell us about the plan?
Okay, the plan is we have here at Northwest Expo, 6% of the drilling would be at Northwest Expo, and 40% would be at good speed. Or just a little bit less, 40%, and then there'll be 2 other targets we're drilling. So on this one here, what we have is the actual port. This is the upper part of the porphyry. If you know Silito's model, it's in the lithocap, like Lepanto in the Philippines. So this is lithocap hosted, and the southwest corner between the Molly Quarry and the very south part of right there where Nick is pointing is where we have found in 2 drill holes indications of porphyry proper at the stem, if you like, below the lithocap of high-grade mineralization that came up. And as you can see in this picture here, this is a porphyry. We've got porphyry class within a hydrothermal breccia of coal-like calcite borax, very high grade. And this is so. And then to the east of that, we got some stockwork veining. I think it's the next slide. We got stockwork veining. So all the indications are that below this, this is true porphyry style mineralization. So at depth, we believe there's this is an oblique section. So this area here, this folded area, we believe down here is where the porphyry source is. So some of our drill holes will be drilling through the lithocap down to where we think the porphyry might be.
So to summarize this program, phase one program, as Robin just described, we're starting at West Goodspeed, which is only about 7 kilometers to the east of Northwest Expo, where we've hit those two very, very good holes, 0.5% copper equivalent over 125 meters from the surface, targeting towards a big magma anomaly, and that ended in mineralization. That's what we're drilling right now. We started that drilling last week, and then we move over to this area, which again, as Robin has described, is in the lithic cap, so the cap of the porphyry, right? And so the focus in terms of the capital allocation is to go and complete our infill around the high-grade pit. It's to go deep. As you can see, we're going actually taking a couple of shots down to try to intersect that source of the porphyry, that this area right here. I don't think you see my cursor, but the stem of the porphyry, right, which is obviously peripheral to the potassic layer that everyone is chasing right now. And then, of course, to step out to chase this upflow zone, this high grade. When Robin says high grade, in this case, it's about 2.1 grams of gold equivalent over 135 meters. That's what we're chasing in terms of the upflow zone to the south and to the east. So that's our phase one drill program, and we'll obviously start to release results starting at the beginning of July on that.
Brilliant. Because you know what's really important, Sam? It's like we're seeing that some see us really starting to get it, and I put yourself in that camp firmly, which is the need to explain the purpose of all holes, because they all have a different task that they've been assigned. And we certainly spoke to one last week, said, I wish I'd signaled what the drilling was actually doing for us and why we're doing, because not every hole's going to sound fantastic, but the data it provides is really, really powerful in terms of for future decisions and so forth. So, I'm happy to talk more on the drilling, but I suspect at this point people probably would prefer to kind of go and look to the deck on your website. Maybe if they've got questions, they can sort of send those in directly to you guys on the website or through us, not a problem. Sam, just finish off. It's quite clear that we're getting to the kind of final yards here in this environment. Everyone's super excited about copper right now. They're looking for good, strong copper projects. You're talking about producers and even other developers thinking that they can take advantage of that situation. For you guys, just be really clear about your end goal here. So what is the end game for you guys?
Yep. So, look, I think 3 years ago we set out to say we want to be over 1 billion tons of resources and mineralized material. We want to show that it's economically feasible to mine it. I think we've done that through the work that we've done. So we are now above that threshold. We're going to be releasing a 43101 report, a technical report that identifies all 3 projects as part of one system. That should be coming out in the next month or so. And so where do we go from here? Okay, well, we have also solved this problem of taking a medium capital intensity project and creating a starter pit solution, right? So increasing not only the life of mine by a significant amount, but also potentially creating a much smaller capital intensive project, higher margin project to bridge into the next 22 years, right? So I think we've checked that box, and we're certainly looking to replace the technical report, global resource technical report, with a PEA around such concept by the end of this year. So, and this is all fully financed. This was all part of the plan that we had set out last year in terms of how we're going to methodically move this project to become one of the most irresistible projects, certainly in Canada, but potentially the world. So then the third component is our third lever, which we haven't talked about, which I'll ask Robin to finish talking about, which is Pemberton Hills, right? So hooray, we've gotten to that sort of minimum threshold of 1 billion tons of, that the majors sort of wake up for, right? But what happens next? Where is this generational opportunity, generational being defined as 7 generations by at least our First Nation partners? Well, it could be potentially Pemberton Hills. And as part of the release that we had made, we said that there is proof of concept at Pemberton Hills. We've drilled 2 of the 14 holes. And so we are making sure that we continue to go after the elephants that sit on our 35-kilometer district of Porphyry district that we obviously own. So perhaps with that, I can ask Robin to explain, what does proof of concept mean for us?
Okay, proof of concept is, first of all, we've got lithocap, which extends from these 3 islands towards us over 6.5 kilometers by 1.5 kilometers thick. And the next one, we'll zoom into the area we're focusing on. So that's the lithocap. And the proof of concept is that it's tilted to the southwest or to the right, and therefore the stem is to the northeast. So the northeast is where this quartzerosite pyrite alteration is. So we drilled there were 14 targets, and we drilled 2 of those, which we showed there. And these are the 2 red holes. That's just our pH 2312 and 2313. So what we intercepted in 2312 particularly was porphyry-style stockwork veining with chalcopyrite. We think we're on the edge of something, and reviewing all this, we see that in historic mapping, there's veins in this creek, which you see the grades there with the red triangles. And so go to the next one. So the area we're focusing on is between these 2 drill holes, this area of high-grade veins in the creek. And so the potential is huge. That's over 2 kilometer strike length or dip length that we're going to be testing. So the potential of this is huge. If you got the 6.5 to 1.5 kilometer lithocap, so the hydrothermal system that created that is quite huge. And we are hoping that the porphyry that we intersect will be quite huge in there too.
So to summarize all of that, Matt, is, as you can see, as we get more and more and more evidence through our drilling program for resource estimates from PEA, from early stage blue sky exploration at Pemberton Hills, we are starting to define a massive district across 50-kilometer porphyries, right? So our objective here, to answer your question, is to identify this as the next porphyry district in British Columbia. Everyone knows that Canada can be was one of the leading copper producers in the world. And everyone knows that British Columbia is the only place you find material porphyries in Canada, right? And so this, we believe, is something that can become that district. And Robin and his team has done a fantastic job of being methodical around how we are expanding this from what we originally had, which was a low-grade, high-tonnage project, to a low-grade, high-tonnage project that has a higher margin starter operation. And then on the other side of that, something that could, if we are successful in discovery, something that could expand into a generational opportunity and a district opportunity. That's the plan, and that's what we've been thoughtfully progressing over the last 3 years.